Hello everyone and welcome back to the second video of the day. Today we're going to talk about the market's warning and are traders too confident? So if you don't know me, I'm Selena. Welcome to Selena Trading Moves. Here expect everything related to financial world here, especially in the US market. So feel free to subscribe, follow, and also like this video. And make sure to comment, let me know if you may cover any special topic on our channel. So thank you guys for the support and let's get in. So right now the market looks strong on the surface. Stocks are holding up, dips are getting bought, and many traders are starting to feel confident again. But here's a real question. Is this confidence justified or is it just a warning sign? Because in financial markets, sentiment doesn't just reflect reality. It often signals what comes next. And today we're going to break down what market sentiment actually tells us, why extreme confidence can be dangerous, and how to read the psychology behind price moves. Because understanding sentiment is what separates reactive traders from strategic ones. So, what is market sentiment, by the way? It's simply the overall feeling or psychology of participants in the market. It answers one key question: how are traders positioned emotionally and mentally? Are they confident, fearful, greedy, or uncertain? Now, here's the important part. The market doesn't move based on facts alone. It moves based on how people feel about those facts. For example, two traders can see the same news. One sees opportunity, the other sees risk. That difference in perception is sentiment. And when enough people feel the same way, that's when trade transforms. So, sentiment is not just a concept. It shows up clearly in price action. Here's how you can recognize it. First of all, we have strong upper trends. As you can see here in the S&P 500, when sentiment is bullish, dips get bought quickly, price keeps making higher highs, but bad news gets ignored. And this tells you confidence is high. Weak pullbacks. When the market rarely pulls back, it often means traders are eager to buy. They can also mean the market is being overcrowded. Then, if you see sharp sell-off, well, when sentiment shifts, selling becomes aggressive and panic spreads quickly. Then the liquidity disappears, and that's when fear takes control. So, price action is not random; it's a reflection of collective psychology. So, what's the danger of extreme sentiment? And this is where things get interesting. Extreme sentiment is often a warning sign. When everyone is bullish, most traders are already in. There is fewer people left to push price higher, and when everyone is bearish, most sellers have already sold, and the downside becomes limited. And this is called contrarian thinking. The market tends to move against the majority at key moments. So if you hear things like the market can only go up, the dip is guaranteed to bounce, that's when you should start being careful because confidence at extremes often comes right before reversals. So, one of the biggest mistakes traders make is confusing sentiment with reality. Just because the market feels strong doesn't mean it is strong, and just because the market feels weak doesn't mean it will continue falling. So, markets often rely on bad news and drop on good news. Why is that? Because expectations were already priced in. So, the key is not is the news good or bad, but how is the market reacting to it? That reaction tells you what sentiment really is. So, sentiment doesn't stay constant. It shifts, sometimes slowly and sometimes violently. Here are early signs of a shift. The price stops reacting positively to good news, so the bullish sentiment is weakening. We have increased volatility, the uncertainty is rising, and we also have failed breakouts. Confidence is fading, and this is where smart traders pay attention because the biggest opportunities come from changes in sentiment, but not stable trends. So, how to use sentiment and how do you actually use this? Here's a simple framework. Don't follow sentiment blindly, just analyze it. Ask yourself, is sentiment too bullish? Is fear overdone? And is the market crowded on one side? Then position yourself with not the crowd, but ahead of it. Because in markets, the majority reacts and the minority anticipate. So, right now, the key question is not what is the market going, but how are traders positioned? and what happens if they're wrong, because that's where the real moves begin. If you understand sentiment, you're not just watching the market, you're understanding the psychology behind it. And this is where the real edge is. So, if you found this video valuable, please make sure to subscribe and I'll see you in the next video. And thank you for watching. And by the way, if you go to the first comment in the comment section, click on the link down there. It's going to take you to our WhatsApp group where we share important and insightful advice that would help you in your trading career. So feel free to join and I'll be waiting for you there. Thank you.